Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. Joining me are my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Lewitton, and executive director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning. Good afternoon.
Good. It's afternoon in Barcelona, where I am participating at Avalanche Summit. All right, let's have a live look at Bitcoin, though. The CoinDesk Bitcoin price XGX index is at $42,987. Bitcoin is climbing about 4.5% over the past 24 hours. The CoinDesk Ether price ETX index is at 2970, falling back about 1.4%. The DFX CoinDesk DeFi index is at 261, also sliding down about 1.8% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as leader in crypto news, events, and data. So Bitcoin's correlation to the S&P 500 has hit a 17-month high, Emily. That's pretty surprising.
Yeah, I mean, it's surprising if you buy into the whole Bitcoin rhetoric of it being a unique asset and it being a hedge against geopolitical risk. We've kind of seen that this narrative isn't exactly accurate, but this has some data to support that Bitcoin is just sort of acting more like a traditional asset.
Lawrence, what strikes you from the markets?
Well, right now, I think everything is just kind of like on a wait and see mode. We've gone through the last week with Fed Chair Powell saying, he's going to get more aggressive. But for the time being, I mean, yeah, Bitcoin is up a few percent here today, but it's not necessarily, it's not making a major move.
A very tight trading range.
With the alts, it's like, okay, great. Yeah, we'll just, everyone's still wait and see. And, again, getting back to this whole continuous theme, it's the volumes just aren't there the way they were a few months ago.
Meanwhile, crypto remains a threat, according to European Central Bank Chief Christine Lagarde, saying yesterday at the Bank for International Settlements Innovation Summit that crypto service providers are accomplices to circumventing Russia's sanctions, while also supporting a speedier creation for a digital euro. Joining us to discuss is Daniel Lacalle, chief economist at Madrid-based investment manager Tressis. Welcome, Daniel. Thank you for joining us. So this point about crypto being used by Russians to evade sanctions has been disputed by blockchain analytics firm Chainalysis, saying that there's no real evidence of that kind of volume being used in Russia. I wonder your take on, how is crypto being used by state treasuries at all, oligarchs to evade sanctions? What's the greater impact they may have on the economy?
Certainly. First, we need to completely debunk the idea that cryptocurrencies are being used solely for purposes of avoiding sanctions, etc. If we know what is going on really, most of the oligarchs or the people that are trying to avoid sanctions, what they're truly using is either the yuan, the Chinese currency, or gold. Cryptocurrencies are being used, and it is true, by the poor Russian citizens that have nothing to blame on in the country and in Ukraine to avoid the destruction of the purchasing power of the ruble. That is a completely different thing. What we need to understand is that the excuse of saying that cryptocurrencies are used to basically undertake illegal activities, etc., is completely debunked by reality. The reality is that what is going on right now is a currency war. This is the first time in history that we have seen sanctions that make a central bank be unable to access its own reserves, and therefore cryptocurrencies are basically being used to provide some level of support in terms of purchasing power to citizens that are seeing the ruble collapse.
Daniel, welcome back. One question that has come up with some economists that I've spoken to is this: is a question of whether or not the U.S. dollar will ultimately could potentially lose its status if that currency war continues, because it's the idea that, it served a function as a reserve currency, and if you can't access reserves, other countries will be reluctant to hold it going forward. Is that necessarily the case, first of all? And
I wouldn't say that the dollar is going to lose its reserve status because of the sanctions against Russia. But it is true that what we are seeing is that citizens all over the world and the media are starting to understand that the reserves of a central bank are not coins and bullions in a basement of a building, are swaps, are treasuries, are bonds, and that they can be sanctioned and certainly limited. And what I think, in any case, is that if anything, what other central banks might start to think about is the reality of how feeble the value of many fiat currencies is. For example, many of the people that are watching right now may have heard numerous times in previous years that the Russian ruble was the most gold-backed fiat currency in the world, and therefore it was very safe. Well, it's proven not to be. And ultimately, we're starting to redefine and understand that there's a completely different thing between what it is a reserve fiat currency and what is a gold-backed currency.
I think anybody who's traded the Russian ruble back in the 1990s would be really scared about trading it, considering it to be a stable currency. That said, you see more problems for Europe than the United States because of the sanctions. But was there any other way that it could have been avoided, the kind of economic hardship that will come to Europe because of the sanctions? Is there any other way that that some sort of punitive measure could have been taken against Russia economically without hurting the rest of Europe?
Yeah, it is true. States is a bit more shielded against the counter effect of sanctions on the European, but ultimately there are no winners. No. Why? In which way is the United States losing from this situation? First, obviously, by inflation. It doesn't matter that the United States might be able to have less of an impact in the European Union. Inflation is exactly the same. Second, I think that also we need to understand that for the European Union, Russia is a very large trading partner. The impact of basically Russian sanctions usually mean that for each dollar of sanctions on the Russian economy, the European Union suffers about 20 cents. And obviously, it's not a direct correlation, but just to give an idea to the people that are watching. And the other thing that we need to understand is that the United States loses because it's a big trading partner of the European Union. So the impact ultimately is that the European Union, the Eurozone, is going to suffer and is suffering from the sanctions quite severely, not as severely as the Russian economy, which is collapsing with plus 20% inflation and probably a slump in GDP of about 11-12% minimum. No? But obviously, there is a secondary impact for the United States. The United States is relatively shielded because it doesn't have significant exposure to Russia, but it has very important levels of exposure to the European Union and the Eurozone.
Daniel, meanwhile, we're seeing high correlations between Bitcoin and the S&P 500. I'm just curious what you make of that correlation and how you interpret it.
I've always said that cryptocurrencies are startup currencies. Ultimately, they behave as a financial asset similar to technology companies that are starting. Bitcoin is the most advanced in the process of becoming a currency. It's starting to be reserve of value, generalized means of payment, and a unit of measure in some countries and in some and numerous transactions. But it's still very far from being any of those three, from being those three, which is what we would consider a stable and long-term currency. And what is going on with cryptocurrencies is simply that, is that we have to understand that in the process of becoming real money, they They will have the volatility in value relative to the dollar and relative to the euro that technology companies or that financial assets that are linked to technology would have. However, what I find interesting is that the correlation versus the S&P is very high. But in the meantime, people that don't live in countries with stable currencies like the euro or the US dollar, people in Argentina, people in Iran, people in Turkey, people in Russia, are not worried about the volatility of Bitcoin. They're worried about the volatility of their domestic currency.
So I'm wondering, as you talked about the sanctions, the impact on Europe, of course, in Russia, the devastating impact there, there's going to be a lot of difficulty in the supply chains as if it weren't already complicated by the pandemic. So are things going to be worse? Is GDP going to go down globally? Is that going to cause some sort of stagflation where we're seeing a limited output yet high inflation around the world because of all the money printing happening? And would you regard Bitcoin or other cryptocurrencies as a good store of value amid that uncertainty?
In the midterm, yes. Obviously, short term, cryptocurrencies are as volatile as bonds, as equities, and they're not a good hedge against inflation in countries that benefit from being having a stable currency, as I mentioned before. But the reality of the risk of stagflation that you just mentioned, which is a complete nightmare for an economy, because governments that are attached to a fiat currency know more or less how to manage inflation, and they know more or less how to manage deflation. They don't know how to manage stagflation. Stagflation is truly a problem because prices go up, and yet the economy is not rising. So if you take money out of the system, you may create a financial crisis. And if you put money in the system, inflationary pressures go up. So that's where the most advanced cryptocurrencies may start to prove themselves to be a good stagflation hedge. Not an inflation hedge, but a stagflation hedge.
Interesting analysis, Daniel. Really appreciate your insights. Thank you for joining us. That was Tressis chief economist, Daniel Lacalle. All right, coming up, we'll have a crypto markets update with CME Group's global head of equity and FX products, Tim McCourt. All right, seeing a lot of red candles right now in the crypto markets. The Bitcoin XBX index is currently at $42,196, down about 1.6%. The CoinDesk Ether Price ETX index is at 29.59, also sliding about 1.6%. And the DFX CoinDesk DeFi index is at 261, tracking losses of about 1.7% over the past 24 hours. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So lots going on, of course. Joining us now to discuss the crypto markets is Tim McCourt. He's Senior Managing Director and Global Head of Equity at...
Oh, we have some technical difficulties on Lawrence's end. All right, so joining us now to discuss the crypto markets is Tim McCourt, Senior Managing Director and Global Head of Equity and FX Products at the CME Group. Welcome, Tim. Thanks for joining us. So taking a look at the markets, we're seeing thin volumes, bit of a backtrack from yesterday's surge. What are you seeing? What's your crypto outlook?
Yeah, I think when we look at the market here, even listening to Daniel, the previous guest, there's obviously a correlation in this market between things like the equity indices are increasing in a bit of a sideways territory, so to speak, I think in several of the asset classes, and crypto displaying some of that price movement as well. I think what's interesting is, we've seen various market developments over the last few weeks. And I think when we're here in some of these sideways markets, it's a great opportunity to remind people that it's both an opportunity to deploy new trading strategies as well as manage some of that risk that you have, whether you're looking a risk on or risk off. We know the market participants often disagree in these type of sideways markets, which make them exciting. No necessarily view on where it goes from here, but I'm excited that we're launching some new products at CME Group in next week that may help market participants manage some of this uncertainty, and particularly around their price-related risks around Bitcoin and Ether.
So speaking of new products or of your products, you've had the past several quarters have been very good for you guys in terms of volume. The average daily volume has gone up tremendously. What's driving it? What does it say about market structure?
Yeah, I think one of the key things that are continuing to drive volumes at CME are that we're attracting new participants to our markets, both on the institutional and the retail side, with our continued product innovation and product deployment across both the Bitcoin and Ether ecosystems. And then we're also seeing more trading activity out of existing customers as they continue to increase their crypto trading strategies or their risk management related practices around Ether and Bitcoin, as their other parts of their crypto portfolios continue to increase in terms of allocations or use case, both in the spot and the derivatives markets as well. So we're seeing a continued tailwind of adoption, which has been a multi-year story here at CME Group. We launched Bitcoin futures back in 2017, and then we introduced micro products on Bitcoin and Ether last year in 2021, which have been an outstanding success. Those are the yellow bars on this chart, where since launching micro Bitcoin futures, over almost 5 million micro Bitcoin contracts have traded, and launching micro Ether back in December, 1.2 million contracts have traded just in a few months, which I think really speaks to the importance of a smaller sized, more precise contract that is attractive to both institutions and active individual traders as they're looking to both access the crypto markets as well as manage some of their risks in the rest of their crypto portfolio.
And what's going on with the Bitcoin futures premium, as you have a bit of news there?
Yeah, I mean, it's always a good question. I like to point out, if I kind of knew exactly what was going on with the Bitcoin futures premium, I'd probably have a different job and be out there trading it. I think it's still something that is very exciting to watch develop from a fundamental perspective. I think it's something that we'll continue to see evolve as we see the interrelatedness between the various products develop in the market. We now have regulated derivatives. We have OTC derivatives. We have a spot market. We had the advent of futures-based ETFs back in October in the U.S. market. So as all these vehicles come to market that offer similar exposure in an interrelated fashion, you're going to see that basis or that premium or potential discount at other points of history will develop. And I think that's something that people are going to watch, because that's often a proxy of statement of some of the associated frictions that may exist in the spot market, whether they're pricing in some of the access to short Bitcoin, insurance costs, storage costs, custody costs. That basis or that premium is always a great indicator of the other factors driving price besides just accessing or purchasing or selling Bitcoin spot or Ether spot.
So, Tim, I was wondering if you could help break down this sort of larger macro narrative that's going on right now, because it's sort of confusing, right? So the conventional wisdom about Bitcoin is that, inflation in theory should make crypto go up, right? Because it's a hedge against inflation. But then there's also this conventional wisdom that higher interest rates will make crypto go down, right? Because that's bad for crypto. But now we sort of have both of these things. We have inflation. We also have higher rates. But so what's going on? Is it, or do these correlations are they not even real? I would love to hear you just sort of break down this narrative.
Yeah, that's a great question. So I think what's interesting about it is you certainly have at times almost diametrically opposed influences driving the price discovery process. So certainly you have the deflationary characteristics of Bitcoin with its fixed supply, and then you have the interest rate backdrop, where the expectation is rates will continue to rise for the foreseeable future from the U.S. perspective. And maybe they're at odds with each other, but I think that's what's great about markets, is markets are much more interesting and much more efficient when people actually disagree about what is driving the macroeconomic backdrop or the specific idiosyncratic risks facing any one asset. I think we're certainly seeing that play out here in Bitcoin. Not sure which will win out, which will be the right narrative, but I think they're both certainly important factors driving the price formation that we have right now. And I think, again, that's what's an interesting backdrop for us. We're launching micro Bitcoin and micro Ether options next week on March 28th. So as that uncertainty increases, or people are becoming more and more cemented in their own viewpoint with respect to the price direction of Bitcoin and Ether, they can now use the smaller size options to either hedge against some of those concerns in the market or take advantage or be opportunistic about what they see developing in the term structure as they see these forces play out from some of these opposing forces driving the price formation or the price discovery process for Bitcoin and Ether.
Tim, since you mentioned Ether, can we talk a little about Ether for a second? What's going on with Ether? It seems to be doing pretty well lately. Is this just Ether just kind of like following the general market trends, or is there anything specific going on with Ether, in your opinion, that is driving the price up?
I think what's interesting about Ether, and one of the reasons why we also introduced additional products around the Ether token and the Ethereum ecosystem, is to me it always has a very unique and organic use case that is different than Bitcoin. Ether is powering the Ethereum network. There are a tremendous amount of DeFi projects and protocols coming online that use Ether to fuel their transactions and fuel the network. So to me, that has a very different use case. And like I said, organic demand, because people, as their projects are coming online, as their projects are developing, they have to transact in that token. It's much more transactional, I would say, in that regard with respect to how it's being utilized by the projects. It's not necessarily the same conversation from our perspective with institutions and traders that Bitcoin is much more of a trading vehicle or a store of value. Ether has that fundamental utility that differs from Bitcoin, and I think that's going to remain attractive to the marketplace. And I think that is longer term and in the short term providing some of the upward price pressure on Ethereum, just because the demand is increasing from my perspective.
All right, we'll see how that develops. Tim, thank you for your analysis on the markets. That was CME Group Global Head of Equity and FX Products, Tim McCourt. Coming up, the pursuit of economic sustainability in mining with CoinDesk's Sandali Handagama. Also, plus the most decorated U.S. athlete in the Winter Olympics, Apolo Ohno, joins us next.
What's up, everybody? This is Spencer Dinwiddie.
And I'm Solo Cisse.
And this is New Money, brought to you by CoinDesk.
All I hear, go get the money. So I go get it. Hate means I do something right. So I'ma let him. Yeah, I'ma let him. Yeah, I'ma let him. I hit the nail on the head. Yeah, I'ma let him.
What we'll see is money not only being exchanged for this digital currency, but the frictionless movement across borders. It's going to be able to flow as easy as a text message.
Staying true to yourself, right? Like, you've always been true to yourself.
I just want to share that with everybody. You could be yourself in full capacity.
It's our duty to take our visions and be fearless in our pursuit.
Be my most authentic self and show people that, look, I'm an athlete, and yes, I'm also part of the LGBT community.
My goal is to have, my own NFT, my own entire IP, like my own everything.
How do you think, blockchain and crypto impacts the way you think about it?
I think everyone has some sort of so how'd you get into Bitcoin? It's like asking someone if they smoke. It's like, yo.
Embracing where the world is going. And when the whole world shut down, we saw just how important tech was.
It was more so of my style and the foods that I cooked that kind of pushed me. I wanted to live the lifestyle of an athlete or an artist while doing what I love.
Having that open mind, having that flexibility just allows you to be of so much more service to, youth or society in general.
Gamers, maybe it's because you guys just hustle different.
Anything you want to be great at, you got to put hours and hours in every single day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Oh no, it's frozen. All right. Our next guest is the most decorated U.S. athlete of the Olympic Winter Games, winning 8 medals during his illustrious speed skating career. He's also an early crypto investor and serves as the crypto partner at Tribe Capital, a San Francisco-based VC firm with over $1.6 billion in assets under management. Please join us in welcoming Apolo Ohno. Welcome, Apolo.
Thank you for having me.
Great to have you. All right. So I guess the first question is, I know you've been early in crypto tell us when you got in, but how did you get into crypto?
Crypto has been kind of in and out of my life since 2013. One of my roommates was a very early stablecoin founder, and that was my first entrance in the space. And then more recently, on a more kind of directed approach with Tribe, this is something that has happened over the past 2 years, where the team really has focused all of our efforts, which we still do on traditional venture and equity, into kind of working in a stealth mode in terms of how can we support some of these systems. So, I've always loved crypto. I think most athletes, as you've seen, is this rise of popularity in terms of their interest in participating in various forms, whether it's through NFTs, whether it's through understanding different DeFi products and availability of these different protocols. It's just a fascinating time, and we think that we're at an inflection point. So I'm very happy for this stage of my life to be able to support such a great team, to support great founders.
So since you're mentioning all these athletes in crypto and NFTs, it's definitely a thing, right? So I'm just kind of curious, like what you make of this phenomenon. Why are there so many athletes specifically in the crypto NFT world? Is it just because, it's a good marketing gimmick, or is there any kind of correlation between these athletes who like risk and adrenaline and being attracted to the crypto market? I'm just curious, as an athlete yourself, how you see this connection.
Well, while I can't speak for every athlete, I can tell you that there's definitely incredible marketing angles. We know the adoption of crypto and how people align with specific people on Twitter, et cetera. I think we're seeing something that athletes love to flex, right? This is something that is not just akin to those on the field, but people love to utilize these social kind of approvals by the type of PFP that they have purchased or the different types of communities that they are aligned with. I think what's more interesting is when you peel back that first layer of, well, that's just a PFP, right-click, save as, you're seeing a lot of people and communities develop these ideas around both governance, IP, as you've seen with the Bored Ape community, which has been phenomenal, along with CryptoPunks. We as a firm haven't participated on individual NFTs. I have, personal NFTs that friends have gifted me and that I find that I think are really fascinating from an art perspective. But look, we're at very early days. And I think overall, when you look at this ecosystem, this is a macro inflection point that I think many people, whether you are, a professional athlete who has a tremendous salary and wants to allocate some of that towards crypto, but everyone wants to take advantage of this phenomenon. And as what we've seen during the past 2 years, kind of when the spout and the faucet was on with all the money printing, all of this new development, all of this new interest, and all of this new surge to participate really happened. So you had this incredible catalyst of all this additional cash floating around. People were looking for, on both sides of the barbell, the most at-risk assets to go up. And, as a firm and individually, I believe that crypto and DeFi finally have some functionality to be able to support such a broad array of economic activity. And so I think more importantly, what we're seeing, not only from athletes, but also on the institution and the venture side, is that the adoption level amongst this ecosystem and the participants, whether it's the entrepreneurs, the athletes, retail, institutional, the end users, even capital providers and allocators, it's now high enough to where we think the overall phenomena is actually finding its own true product market fit. And so, over the past year, that's where we've been spending a ton of our time, is both on-chain analytics, understanding behavioral sentiment across the different verticals in the ecosystem. And I think it is absolutely fascinating to see the rush of development activity that is in the space from Web 2 as they venture into this new arena. So again, we're early. Yes, there's going to be a lot of noise and a lot of things that sometimes make us scratch our heads, but that's with every advent of technology craze that's among us. And this is one that we believe has now solidified itself to be a real transformational ecosystem.
So, Apolo, what makes you choose the investments that you do choose? What's the underlying thesis in it all? And why are you in Barcelona right now for the Avalanche conference?
Yeah, so in full transparency, the founders of Avalanche are quite close friends of mine, and their conference here has been pretty phenomenal. But I would say the way that we approach investing is and specifically crypto opportunities, is very much like how we approach private startups. So how do we extend our point of view towards how you look at an overall ecosystem and economy? And then how do we use our data science and engineering team in a way to look for those quantitative pieces of evidence of true product market fit? How do we empower those founders by really, I think, providing and developing those tools, whoever and whenever possible, which we have this thing that we call the Magic 8 Ball, and this is framework that is a more stringent quantitative framework in order to kind of develop a better thesis and visibility on if an investment is gaining traction, do the metrics in this vertical make sense, customer retention, usability, et cetera. And then that helps both parties recognize that inflection point that I had spoken about in both these points of growth. And so, we have invested across the ecosystem, everything from deep DeFi tech, infrastructure, NFT tooling and API integrations, all the way to centralized exchanges and beyond. And so, look, this entire community is incredibly collaborative. I think that's the one unique element. And we're still early enough to where the elbows aren't quite sharp. So we share a lot of deal flow. We communicate with other leaders in the field. Yeah. And some of the brightest humans I've met in my life have the most creative ideas in terms of how they view the next decade to look, or even the next 4 years. As you've seen, 1 year in crypto is like 6 in real life.
A lot has happened for sure. And I see that, you've been in crypto so early, 2013, and there have been a lot of ups and downs since then. I did see that there was a $50 million lawsuit that was filed against your company, Hybrid Trade, by your investors for selling unregistered securities during the whole ICO boom. Ultimately, you won because the U.S. District Court found investors waited too long before filing that lawsuit, over a year. But what happened in your words, and what did you learn from that experience?
I think I learned a lot of things. I had, this company that we had tried to start was something that we deeply cared about. We tried our best to succeed. And ultimately, in operation mode in 2017 and 2018, as you saw, there was a tremendous interest, very similar to what we've seen today. The regulatory oversight was something that was not quite clear, especially in Asia. We were an Asia-based company. We had a ton of employees. And as someone who was the kind of only public-facing figure, I happened to be that target, unfortunately. And so I had to kind of bear the weight of those things. But was very happy about that vindication. Something that had been kind of on me for a long time. And the actual suit was not actually in that amount of money. That the company had never raised that much capital. But it was an inflection point, a turning point. So, I spent a lot more time on the investing side. I've been through that process. I know what these founders will face at some point when it comes to learning how to pivot, learning how to change and reinvent, and that's something that I take to heart. So it's been a tremendous learning process. There is no journey that isn't without its challenges. I think that's for certain, and I think it's all about how we embrace those challenges and reinvent and transform how we want to continue upon this thesis of supporting the best people in the space.
Well, a lot of celebrities and athletes have run into uncertainty and trouble for various promotions of cryptocurrency. So it's something to watch out for. All right, Apolo, thank you for joining us. Appreciate you coming on. We got to wrap it there, but that was Tribe Capital partner Apolo Ohno.
So we've heard a lot about crypto mining in places like China and the United States, but I think less understood is crypto mining in Europe, specifically in countries like Italy. And our Europe regulatory reporter, Sandali Handagama, has done some really amazing reporting on those areas specifically. So welcome, Sandali.
Hi, thank you for having me.
Good to see you. So, you've been doing some really cool reporting and also photojournalism across Europe, looking at Italy, looking at Sweden. I guess, what is your big takeaway? What have you learned? What is the most interesting thing that you've discovered in covering mining in these countries?
So I'll start with what I thought was the cool part. There are at least 18 hydropower plants of varying sizes across northern Italy, contributing computing power to the Bitcoin network, and more are on the way. I visited some of these hydropower producers, as you can see from the pictures, in February, that have installed Bitcoin mining rigs quite literally next to their turbines. And they're basically self-consuming a portion of the energy that they produce through the miners, and then sell the computing power generated to mining pools around the world. And in northern Italy, it's an ideal region for hydropower because it's so close to the Alps, so there's an abundance of water typically, but the government buys energy that they produce for very little, around 6 cents a kilowatt hour. And these producers told me that they sell the computing power generated for a much higher price than what the grid is paying. So it's giving them an alternative revenue stream that can help them with maintenance costs if they're very small facilities. And if they're large enough, profits are reinvested into expanding their renewable energy production. It's also worth mentioning that they don't actually mine crypto, just generate the computing power. They don't really come into contact with any crypto. And in Italy, actually, there's this tech startup called Alps Blockchain behind the entire operation. It's founded by two 23-year-old crypto entrepreneurs, and the hydropower producer invests in the machines, but Alps Blockchain handles everything from purchasing and setting up the rigs to maintenance, and also with tax reporting to make sure everything is done according to local regulations. But for me, the hydropower facilities were the most interesting find, but there are also larger mining operations like the one in Sweden.
Yeah, so about the one in Sweden, what exactly is that? That's also hydropower? And is there a difference between the type of people that are involved in, let's say, Sweden than they are in Italy, or is there an underlying theme in who these people are who are getting involved in this kind of hydroelectric business here?
So what's interesting about Italy is that the hydropower producers themselves are getting involved in setting up these data centers, whereas in Sweden, the facility I visited is run by Hive Blockchain. It's a Canadian company, publicly traded company that has facilities around the world. And this is a large facility that draws power from 2 local hydropower plants. But they're different because they pay market prices for the energy, so there's no special agreement on how the energy is sold. But the Hive facility in Boden, Sweden, northern Sweden, was really interesting as well because it directly participates in balancing the national grid. And what that means is on a daily basis, they could be called on during peak hours of household energy use, or if there's any kind of disruption in electricity supply, it can be asked to kind of power down so that energy can be diverted to the national grid. The system is called Frequency Containment Reserve for Disturbances. It's kind of a fancy thing, but it's just an automated system of power reserves that are called.
It's an interesting contrast, Sandali, because yesterday we spoke to Cheyenne, another one of our CoinDesk reporters, about upstate New York and the discrepancies between the community there, those who are for mining, against mining, but is in Italy and Sweden, are they winning the ESG, the environmental impact debate when it comes to mining?
So that's still debatable because in a way, so in Sweden, regulators kind of came out and said, we don't want energy that should be going into national use being diverted to crypto mining because it's not a very good use for this energy. And but locals would disagree because these facilities have created jobs in the end, and they're very much not interfering with anything that's going on. In Italy, one of the facilities I visited was actually run by a municipality. So the mayor of the town convinced his constituents to invest in this project. That's an interesting revenue stream for the hydropower plant. So I think when you educate people, they can get on board. And also this is strongly pushing the shift of mining towards renewable energy. So people can be convinced. Regulators and lawmakers, on the other hand, need a bit more convincing. We're seeing a lot of crypto advocates trying to convince them, hey, kind of try to understand the tech, try to understand what we're trying to do before you go ahead and ban something wholesale. But yeah, it's going very slowly, and there's a big debate in the EU Parliament as well as to whether or not proof of work crypto should be allowed in the EU.
Super fascinating how all the different cities and towns, even countries, are approaching the whole mining debate and its environmental impact. Sandali, thank you so much for joining us. Of course, on CoinDesk.com, we have Mining Week. A series of articles on mining will be published. And we have Will Bitcoin Mining Decentralized? CoinDesk is chatting with experts from Maverick Group, Foundry, and The Block to discuss Bitcoin mining, migration, and decentralization on Twitter Spaces. That's today at 11 a.m. Eastern for Mining Week, sponsored by Foundry. So tune in on CoinDesk's Twitter account for more. All right, that's it for our First Mover. Thank you, Emily. Thank you, Lawrence. I'm your host, Christine Lee. In the meantime, check out The Hash at noon Eastern and All About Bitcoin with me at 3. You're watching CoinDesk TV. Also, next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Seems like we can't escape from the NFT buzz that's going on around the world today. Welcome to the Daily Forecast, March 23rd, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, the NFT frenzy is showing no signs of slowing down, with Australia's Blockchain Week taking a deep dive into the intellectual property rights today, while China's blockchain-based service network has increased its support for NFT developers in China. We're going to take a look at those stories and more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
But first, some big IPO news, or rather retraction in this case, amid escalating global uncertainty and market volatility. Fosun Corporation has decided to defer its security token IPO. Forecast's Timmy Shen has more.
Licensed in both Hong Kong and Malaysia, the company's ecosystem includes Fosun Exchange. Having gained regulatory approval for its security token IPO back in January, the company had planned to list tokens which represented its shares in digital form on its own Fosun Exchange on March 31st. However, it has now decided to defer the listing, saying that while they are operationally ready, the current market uncertainty caused by the conflict in Ukraine means going ahead would be unfair for investors. Their CEO told Forecast the decision was not taken lightly.
We decided, and the team and the board ultimately decided, that actually it would be in the best interest for all of us, not only as a company and shareholders, but really the entire market and the security token industry, if we ensure that when we do this, we really do it right.
Though the IPO has been deferred for the moment, trading activities on Fosun Exchange remain uninterrupted. For Forecast, I'm Timmy Shan.
Well, those macro concerns don't seem to be having an impact on the NFT space. However, indeed, support for homegrown NFTs is growing in China. The state-backed blockchain-based service network, or BSN, has announced the addition of Zhongyi Chain to its open permissioned blockchain ecosystem. Now, the new chain adds to the options offered by BSN for developers to build decentralized applications, and it was developed by telecoms giant China Mobile, which serves as one of the 4 founding members of BSN. The Zhongyi chain serves users on the BSN DDC network, an infrastructure that allows for the issuance of NFTs in China. And important politically here, it does it without the involvement of cryptocurrency transactions. Unlike cryptocurrencies, NFTs are not banned in China. However, state media outlets have issued warnings about their speculative nature. You can find those stories and more at forecast.news. Over in Australia, meanwhile, the Australian Blockchain Week event is well underway, with Wednesday's agenda in Melbourne moving the focus onto NFTs and intellectual property rights in particular, alongside discussions on the metaverse and GameFi. We sent Forecast's Lachlan Keller there to find out more.
Taking place at Melbourne's Marvel Stadium, Day 3 of Australian Blockchain Week took a dive into the rising importance of intellectual property rights. Michael Bassina, a partner at Piper Alderman, said that IP issues had been very much overlooked for a long time. However, he suggested that an upcoming case over a Pepe the Frog NFT worth $500,000 could set a precedent for the industry. While fellow panellist Alana Kirshner of Guestwork Agency questioned whether the restrictions some NFT marketplaces impose on users preventing them from reselling on other platforms would hold up to a legal challenge. Jeremy Lowlinger of the National Basketball League warned that we may be in an NFT bubble and that those who understand blockchain technology are the ones who will come out the other side and capitalise. Getting onto all things Web 3.0, Animoca Brands co-founder Yatsu spoke on the need for rapid adoption of all Web 3.0 technology, saying that the faster people join, the more distributed it will be, and without that happening, a new kind of elite could be inadvertently created. For Forecast, I'm Lachlan Keller in Melbourne, Australia.
Well, staying on that theme, there is no stopping Bored Ape Yacht Club creator Yuga Labs from scaling their NFT business this year. The Web3 company has raised $450 million in its latest funding round, marking one of the largest seed rounds for any non-fungible token collection to date. With this development, the company's valuation has now risen to $4 billion. The funding round was led by A16Z Crypto, with participation from Hong Kong's Animoca Brands and its subsidiary, The Sandbox, as well as strategic partners Liontree, Sound Ventures, and FTX, just to name a few more. Yuga Labs says it plans to use the funds to grow its team and for joint ventures and partnerships. The company also recently made headlines for its acquisition of rights to NFTs, CryptoPunks and Meebits, teasing its gaming metaverse project Otherside, as well as the launch of ApeCoin from ApeCoin DAO. So what am I saying here? All of this adding up to a very strategic play in NFTs and the metaverse. Well, the explosive growth of NFTs shows no sign of slowing down. It's now estimated the industry could be worth $30 billion this year as demand for digital collectibles and gaming shoots up. So where is this all going? Well, it's all in an exclusive new Forecast research report in partnership with CryptoSlam coming out this week. And we have Randy Wassinger, founder and CEO of CryptoSlam, a cross-chain NFT data tracker and aggregator, joins us right now to discuss what lies ahead for the industry that will be critical to our digital lives in the future. And it's really great to see you, Randy. This is a powerful report. We're really excited about it.
Yeah, likewise. Thanks for the partnership, of course. And yeah, thanks for having me today to talk about it a bit.
All right, we're giving everybody a sneak peek here. We've dissected the numbers that you aggregate every day, Randy, you and the team. These are unique data sets on the NFT market and really the only data aggregator that monitors cross chains here. So that's what makes it super comprehensive. And we're seeing NFT demand showing no signs of slowing down. The overall market grew over 570 times in 2021 compared to the previous year. And more recently, when you take a look at monthly sales, in January of this year, it hit $4.5 billion. So these are massive numbers, Randy. What are the main factors in your view that's driving this?
Yeah, first of all, if we were to talk about 2021, we have to mention the fact that crypto in general went way up compared to like January 1st of 2021. So the price of Ethereum at like 3x, 4x between now and whatever data point we're looking at. Not to mention like the insane increased demand as NFTs went mainstream. I feel like it was obviously driven heavily by collectibles, and I feel like there was a bit of a convergence between collectibles and investors and speculators, and it just became this fun phenomenon in 2021. Very tech savvy people who just really have enjoyed experimenting, I guess, with the possibilities that NFTs can bring. And yeah, the collectibles were a huge first use case, but it's certainly just just one use case with many more to come.
I totally agree with you there. That is exactly what we're seeing as well, even in real time as we report on the day-to-day activity. But it really is, totally agree with you there, driven by the sheer number of people participating. So they're experimenting with version 1 of NFTs, buying and selling NFTs. It's been rocketing, as we know. Ethereum, one of the main blockchains on which NFTs live, saw 1 million unique buyers. Coinbase, which is set to launch its own marketplace, has 3 million people on the wait list. So you mentioned that we are V1 of NFTs. In your view, what are the other versions that we could be seeing? Where are we in the life cycle of this asset?
Well, I would say we are still very, very early. Mm-hmm. 1 million people, or I guess wallets, transacting with NFTs on Ethereum. It may sound big, but first of all, let's remember that a lot of people have multiple wallets. So any number you hear, just with NFTs in general, like with the number of users, especially on the chains like Ethereum, the numbers are inflated because people have multiple wallets for various reasons. So if you take that into account, we've really just scratched the surface with where adoption is going. So despite all the massive growth this past year, it's still got a long ways to go. So where we're at in the life cycle is just very, very early.
Oh, I mean, I think nobody even conceptualized what this was. We know the people who conceptualized what it was, and we were absolutely reporting on it and talking to them. You built an entire company based on that. But I think for a lot of people, it just kind of came out of nowhere. And NFTs started their life as digital art and collectibles, giving people the chance to express themselves through their avatars, becoming part of a club in a way. But where do you think the technology can take us here? Where do we go from here? What use cases do you see for NFTs in the future?
We've hit on collectibles a lot, but you can't ignore the metaverse. There's obviously a lot of traction there already, a lot of fun things to come as they are built out. But I would say, even beyond what we've seen already, if you think of like any asset that can be digitized, most likely will be digitized in a way that, especially in a way if there's a benefit for it being on the blockchain, then I feel like the sky's the limit. Now, not all assets, I don't feel like belong on the blockchain. Like, for instance, event tickets have been mentioned as a possible use case. I'm not so sure that they are, meant to, like, they really need to be on the blockchain. If an asset does persist, then that's what I feel like is where the blockchain really shines, especially when you can combine that with DeFi, where these assets that they can now be traded and bundled up and fractionalized. I feel like there's a life there that we don't even fully get yet, that is still coming.
Well, what we're excited about is that because you're looking at the data right now, you're actually keeping a very close watch as to how people are evolving the NFT space. And we're excited about the report. It is called The State of NFTs, Q1 2022. Folks, keep an eye out for it on forecast.news. And next week, we're going to dive into what's happening in the Asia space and what the numbers reveal. We look forward to chatting about this more with you, Randy. Appreciate the insights here, and thanks for this sneak preview.
You're welcome, Angie. Thanks for having me.
And that's the Daily Forecast, rounding up all the key developments from the blockchain world from Monday to Friday from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.